Hello, everyone. It's Blake here with Trade Tracer. Make sure you hit that like and subscribe in the bottom right. As always, none of this is financial advice. Always trade and invest at your own risk. Let's go ahead and get started. We're going to kick it off here with the S&P 500. Now, what we have going on here is on February 4th, we had what I classify as price strength confirmation above a previous high. That high was 385.85. And above this level, we had odds in our favor that this uptrend was going to continue. And you can see since then, we've just kind of grinded higher. We've had a couple shakeouts, but we never broke trend. We're still above all major anchored VWAPs. So from the previous pivot low to the year to date, and also the vaccination news, which has happened to act as support multiple times. And right now, we're still hanging out well above the 10 SMA and well above this cloud, with the MACD confirming this price movement higher. So overall, the S&P 500 looks very healthy, very bullish, and over the long term, I do expect this trend to continue. And the reason that I say that is not based on opinions, but it's solely based on price. You can see on the monthly time frame, we are in a very, very strong bullish uptrend. You can see we're very far deviated from this 10 SMA, which is the top of this cloud, and the MACD is confirming this price movement higher. So on the long-term time frame, we're looking very bullish. On the weekly time frame, we look very, very bullish. And so we have time frame alignment. Time frame alignment is a concept where you put the odds in your favor, where you have the confluence of multiple time frames in your favor. So we're in an uptrend on the monthly, the weekly, and the daily time frame, meaning that you don't want to be fighting this market. You don't want to be trying to take any short positions because the macro trend is up. So you want to be placing your bets on the market going higher. So overall, the S&P looks very healthy. Now, are we due for some sort of pullback? Potentially, but we did just confirm price strength confirmation once again on Friday. And let's not forget that this week is OPEX, and we are in the middle of earnings seasons, and we've had big names like the FANG names really report excellent, stellar earnings, but the market really hasn't moved off of them. They've been kind of underperforming, and we've seen this sector rotation continue to move these indexes higher. So markets don't have to go higher without, Apple and Amazon and, the Facebooks of the world continue to move higher if it wants to, if we continue to have this sector rotation. Now, let's go ahead and break it down into some of the things that I'm looking at. Well, first off, you guys know I like to trade tech, so the NASDAQ is what we are invested in the long-term portfolio. Bonds, like I've been bearish bonds for quite some time, and I've said this is dead money, looking to roll over even more. So not where I want to be placing my money, is definitely not in bonds. Gold is at a very important price inflection point. So from this VWAP low, we're still hanging out right where this VWAP is. So very important inflection point. I think below, let's call it Friday's low, 169.75. This has odds to go lower. If we can get back above the 175 level on GLD, I think there's a good chance that we can maybe make a run at 180. So those are your levels on gold. Right now, I'm currently not participating in this market, but if you were to pick one, or if I were to pick one, I should say, I would prefer silver. So silver actually is still holding the cloud. We're still in an uptrend, and the MACD is flat. But if we can get it back above this 25.50, I think there's a chance that we can maybe make a run up to this 27 level, and above 27 on the higher time frames on the weekly and the monthly chart. This is looking to set up fairly well. So keep an eye on silver. I still do like it. We kind of pulled out of it in the investment portfolio because there were other sectors that I liked that were leading instead of silver. So still, definitely still like silver, but as of now, not invested in it. A couple of the sectors that I do like are the bios. So IBB and XBI, I both like. And then also the semis. So semiconductors, SOXX and also XOXL, if you want to play with some leverage. So I definitely fully expect the semiconductors to start to lead, and that's a good thing. We want to see tech lead. So I definitely like the semiconductors heading into this week and the remainder of this month. A few ETFs that I think you should definitely be aware of are the ARK ETFs from Cathie Wood. Been doing a lot of research lately. She's an intelligent person, and I think there's a lot to be said about the performance of her funds. Now, right here, we have a bull flag right here on the ARKK, which is their flagship ETF. Names like Tesla and Square and a couple others are in this. So very bullish, bull flag above highs, so that looks very good. The genomic sequencing ETF also looks very positive, but my favorite is the ARKW. We are actually invested in this quite heavily in the investment portfolio, making new all-time highs with MACD. So ARKW and ARKF also look very, very strong. So just to wrap up, like I said, we have time frame alignment on all major time frames. We are in a strong bull market. Do not fight the uptrend. We just had price strength confirmation once again on Friday with momentum. So odds are favoring higher prices. I don't want to sound extremely bullish, but right now the chart suggests that this market wants to move higher. And until the price tells me otherwise, I'm going to remain bullish. So until next time, hope you guys enjoyed this video. See you then.